Hey, 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 what's happening, everybody? It's the Flow Show coming to you on a Tuesday, special Tuesday edition, because our man Steve Straz over there was traveling, visiting, being a good son. You were being a good son, visiting the parents, you get a pass.
Short visit, but a nice visit. Yeah. It's about a 5 hour drive for me to get to my parents' house in Stewart. So
I was pinging you. I was saying, hey man, you got to look up Bill Dunn Capital Management, located in Stewart, Florida. One of the all-time great commodities trend followers, a CTA. One
yeah,
of my early inspirations as a trader.
that's too cool. I had no idea. Yeah.
I don't think Stewart, Florida is a big place, but you could tell me differently. I've never been, but
No, nice, cute little town though, right on the water.
yeah, yeah.
Close.
Anyway, this is the Flow Show. And if you're the first timers here among us, this is where me and Straza kind of walk through how the sausage is made at All Star Charts, how we come up with options trade ideas. I lean heavily on Steve to help me come up with some ideas. JC obviously helps, and other guys and girls on the team also pitch in. But we're giving you just a sample of how we, kick around ideas, how we arrive at the right strategy, how we arrive at stop losses and all that stuff. And sometimes it's not pretty. Sometimes my screen freezes, as you're seeing right now. Everything just happens the way it happens. Everything here is improvised. But hey, this is what we do every day at All Star Charts. So let's get into it, Straza. What's caught your fancy right now for some possible trades that are worth considering?
I think the corrective action is more or less behind us. We've seen a couple of really strong tapes here just since late last week. And, even today, pretty much most things working. We do have this defensive tilt towards staples, real estate, utilities have been good. I don't think that's where we want to express a bullish thesis, though. I think it's encouraging that more and more stocks continue to work and join the party. I All right. We have a couple different setups. We have base retests that we could buy. So something like, and just using examples here, this is ARC Internet, where you have a nice reversal pattern and then some sort of throwback, right, or weakness here. And then you can buy and look for another leg higher. Or we have what I like even more. Here's like the equal weight S&P 500. This chart is everywhere, Sean, right? And I think this
Including
is,
on our shows.
yeah, right. I think this is the best setup right now. Um, so I can show you some that look like this. There's a lot of sector ETFs that look like this right now. I think you can buy a lot of these retests in energy. You can buy the false starts that are now turning into valid breakouts in materials. But I think into the back half of this year, it's going to be tech leadership again.
So
I
just for people who might be unfamiliar with an equally weighted S&P 500, let's kind of just rip through that real quick. What does that specifically mean?
It means the Magnificent Seven don't dominate the price action,
Right.
right? So every component, all 500 in this case, are equally weighted.
So a move in Google, for example, carries the same amount of weight as the move in, I don't know, EWX waste management company. I'm just making up a name.
In theory, all 500 stocks should be 0.2%,
There you go. Okay.
right?
All right. That's probably the best way to explain it right there. So if you had, let's say you had, maybe keep it even simpler, Strass. Let's say at the beginning of the year, you had $500 to invest.
Yeah.
You invest $1 in all 500 names.
Yeah.
You would match the returns of an equally weighted S&P 500, right?
Yeah. Yeah. Right.
There we go.
As opposed to the traditional way of doing things, the market cap weighted system, which Apple, Microsoft, Nvidia dominate. Those indexes actually tend to outperform because the best stocks with the most momentum get higher and higher weightings. So they drive more and more of the gains. But we use these for information more than anything. Seeing this one back above those prior cycles is really big. I think we can go dabble in something like, I don't know, let me give you ServiceNow. Sean, it's that time of the quarter again where everything I look at like has earnings tomorrow. I was thinking of Uber today. But something like this,
ServiceNow's out of the way. They already had their earnings.
yeah, down 2% today. I mean, how would you play something like this from an option strategy perspective?
Well, your chart looks better than my chart. I'm looking at a 1 year chart. You stretched it out, which is better because now you can see that very clearly defined base, the breakout. And if you believe that that retest is for real, and it's going to pass that test, normally I would say, Straza, when I'm looking at this chart, I'm looking at the implied volatility. I'm seeing the implied volatility is getting,
Yeah.
it's not super cheap. It's actually kind of middle of the road. Actually, now that I look at it a little clearer, a little middle of the road. So options are going to be expensive, which doesn't mean we can't play it. It just means, buying a simple call here, probably not the way I would play it. And in this case, for two reasons. One, because the vol is not as cheap as I'd like it to be, but also it's an expensive stock, right? It's a $710 stock. Call options, even if you were to buy, let's say, an at the money call option, even just expiring in June, which is pretty nearby, you're going to pay essentially $2,500 per contract. Now, if you're swinging $1 million portfolio, then that's no big deal to you. Not at all. But many of the people who watch this show, I know, trade with, small 6-figure accounts, maybe 5-figure accounts. And if you're doing that, buying an option, tying up, $2,500 or risking $2,500 on one contract, that can be problematic. So in a stock like this, if I were to play it, I would probably do a bull call spread, which lowers my cost of participation, yet I could still participate in upside. I would buy a slightly out of the money call and sell a further out of the money call against it to lower my cost. Of course, that caps my upside. If the stock were to rip higher, I might not enjoy as many gains as I would if I had just bought the calls. But in percentage terms, I could still do pretty well because I risked less money up front. So without even looking at any of the strikes, Straza, that's where my head's at. I would probably do this with a bull call spread.
All right. I don't like these high price stocks for option strategies. Let me show you one of the other examples. No, we'll jump around here. Blackrock.
Okay.
This is more like one of those completed reversals that retested really hard. I think, I know we've talked about it on here. One of the recent shows, at least. Capital markets, broker dealers, exchanges, private equity, Blackrock's asset management. Look at this base. Hard retest, a little shake and go. I would draw.
Yeah, I mean, I'd rather see it get back up above 850 before I'm convinced.
Bull
That's
market. Why?
Because you have like zones of overhead supply there, right? You got that 850 nearby. You got about 950 going back to 2022. I don't know. I'd rather only have one level to fight through, not two. That's just me.
John does not like the Blackrock. All right.
No, but and again, this is the same situation as ServiceNow, right? Expensive stock, $800 stock. It's we if I were to play it, I would probably do it the same. What's that ticker? I don't see your ticker up there.
BLK.
BLK. That's what I thought, but I wasn't. I must have mistyped. I'm just checking something on my screen real quick. I mean, yeah, volatility is a little cheaper than that ServiceNow.
Mm-hmm.
So large accounts could potentially position with just long calls. But yeah, high price stocks, again, it's a little real problematic for most.
How about a $200 stock?
Okay, that's a little bit more in our ballpark for most people's ballpark.
Semiconductors have been like sneaky strong, right? So sitting here thinking, okay, technology, I think, reasserts its leadership. What subgroups are likely to lead? Internet's been really strong, but semiconductors are up there as well. Here's one that's kind of fresh, slower mover, lower beta too. So that just means cheaper options. ADI, this is analog devices.
I like this one for three reasons off the top of my head. Number one, just based on the chart, I like the charts out. Is that an all-time high or no?
Should be.
Okay, perfect. Everyone knows who's been listening to me over the many years. I love buying stocks that are making all-time highs.
Look at
For the
this
simple,
thing, Sean, when you zoom out.
yeah. Oh, goodness. Yeah, I love buying stocks at all-time highs for the simple reason that there's no overhead supply, there's no bag holders looking to get out and get back to even, right? So, number one, I love the setup. Number two, I love the sector, right? Semiconductors, if a bull market's going to reignite here, you have to believe semiconductors are going to participate. It's just one of those sectors that I don't want to say every time, but very often will lead a bull market, especially one that we think is going to be led by tech. The third reason I like this chart or like this name is because, and this is maybe just me personally, I have a delta neutral trade on in NVIDIA. And
Ah,
getting long analog devices feels like it would be a nice hedge against
yeah,
my delta neutral in NVIDIA. Because if I get hurt in NVIDIA, I'm
yeah,
probably going to make money in analog devices, at least if there's an upside breakout. Obviously, it won't help me if we have a downside breakdown.
yeah.
So for those reasons, this trade has appeal to me, buddy.
This is $100 billion semiconductor name, that's fresh breakout to new all-time highs. I think there's like an element of catch-up trade here
Yep.
too, right? Like a lot of semiconductors, at least the leaders that we're used to talking about on here, have looked better than this. This one's just now breaking out to new highs while we're seeing some, nice relative strength from semiconductors and more stuff working beneath the surface. Yeah.
The more I look into this, Straza, the more I like it. And here's why.
What's the vol
We
like now?
have earnings coming up on May 22nd. Now, normally earnings would be a red flag or at least a caution flag,
Sure.
but that's still 2 weeks out. And I feel like maybe this breakout that we're seeing right now is smart money. I don't want to call them insider traders, but people who know a thing or two about this company might be starting. We might be seeing, proof in the pudding there that some the people are starting to position ahead of what they expect to be good news coming out of this earnings report.
Yeah.
And considering that earnings are only 2 weeks away, volatility in the options has been declining pretty steadily since the 15th of April. So for the last
Here.
3 weeks, we've been in a pretty steady decline. We're not at the cheapest levels we've been all year, but we're near them. So I like this, man. We could buy simple calls here. We could buy the 25 delta calls and like we can go as far out as December. You said it's a slow mover. When I hear
Yeah.
slow mover, I think I need more time.
Yeah.
We could go December and we could, I mean, the 28 delta option is the 240 strike. We could get those for under $7 right now. I don't hate that at all. I think that's a really good risk reward situation here.
Only $7?
$7 for the 240 strike. So, we would need to have what is that, a 20% move from now to December, but I
More.
mean less than a 20% move, but in the semis, in a semi that's making all-time highs,
Yeah.
that's not a stretch at all.
So just for an idea, let's just fib it out, right? And see what
Fib it out.
the first extension would give us. So there's two ways we could do this. Fib the drawdown here. Let me just clean this up quick. Sorry.
Ooh, look at all those pretty colors. Boy, you do the best charts, Straza.
Like that. All right. So that one would come in right around 221.
That's the first fib.
Yeah.
Hmm.
And then hold on.
Well, I'm already thinking that this would be one of those trades if we do this. Going back to what you said earlier, it's a low beta name. It's not going to move as fast as say Nvidia or Supermicro, right? It's not going to have those types of moves. So maybe if we were to put this trade on and we get these calls for $7 or under, those 240 calls, maybe what we do is we have a little bit more of a conservative a trade management plan going forward. If the thing starts going our way and we're making money, maybe this is one of those situations. I don't do this as much anymore, Straza, but maybe this is one of those trades where we sell half when we get a double, right? Sell half of our position when we get a double and then hold the rest to see if there's a change in character in this name. And if so, then we can have a big win.
Yeah, and like you said, it's semiconductor. When patterns like this resolve higher, we tend to see more than one price targets hit anyway. I like it, and it seems more than fairly priced at $7.
Yeah, it's fairly priced, and like I said, for me personally, it offers a nice little hedge against another trade that I have on. That I'm not saying I'm concerned about it, but
Yeah.
I'm concerned about it.
Concerned about a stock like Nvidia?
Exactly.
Kidding.
I'm short a Iron Condor in Nvidia. I'm worried about those upside calls. I'm short those at the 1100 calls, I believe. I've got a lot of room here, but as we know, Nvidia can move pretty quickly.
So are you like out at the pivot highs? Would you stop
Yeah, if we
yourself
break
out?
a thousand is my stop on that.
Woohoo.
Yeah, so we're getting a little close for comfort. And hey, the good news for me is that depending on how quickly that break above 1,000 happens, if it happens, because I'm short the 1100 strike, we could break my risk management level and I could possibly still skate out of the trade with a small win. It's possible. So we'll see.
So
But anyway, the ADI analog devices feels like a good hedge. So I like it.
I like the catch-up element more than anything. You know,
We've we've had a lot of success with catch-up trades in the past. They can be tricky sometimes, but when they happen, they can be nice. So, all right, folks, I think we've arrived at a trade here. Unless you got something else up your sleeve, Straza.
no, I like this.
Okay.
Yeah.
No, I like it too. So to review, we're looking at the ADI. We're looking at the December 240 calls, paying under $7 for them. They're offered at 690 right now. You could pay the offer if you want and get them. I would work a limit order in between the bid ask. You could probably get it around 675, 680 if you're patient. Either way, I like it. We're in it for a bigger move. I'll probably sell half at a double if I'm fortunate enough to get that. You know what we didn't talk about, Straz, is where we are out. I'm thinking, my thought first glance here, I'm thinking if we can't hold 195 for sure, I'm out. I might even go a little tighter than that.
I was gonna
Yeah.
say 200. I mean, you can always get back in. If we're back below 200, this thing is sloppy.
Yeah.
What I like about this is the fresh resolution. So if it's going to fail, I think you could keep it tight and just be done with it. You'll get most of it back too, right? If you keep it that tight, 200, $4 away. You're going to
The only way we'll get really hurt is if we're wrong on earnings and in 2 weeks this thing just craters 30%, then we'll get hurt. But hey, our risk is defined. The most we can lose is the premium we pay for those calls. I'm going to size my position in a way that the most it's going to hurt my portfolio is 1 to 2%. That's it. I can stomach those types of losses all day long because when I win, my wins are typically much larger than that. And that's how the math works in this game.
That's it.
All right, everybody. Well, thanks for tuning in to the special Tuesday edition of the Flow Show. We should be back on schedule next week, hopefully. Thanks for tuning in. And Straza, thanks for the ideas, buddy. Keep cranking out the good work over there, my man.
Back next week on Monday.
He's declaring it. It's happening. Back at our regular scheduled time, noon Eastern, Monday. Make it happen. All right, folks. Take care. We'll catch you on the morning show tomorrow. See ya.